The Federal Reserve's latest rate cut has triggered a new storm of controversy. Some say that it could ease the pain for some homeowners, but others warn that there is also the threat of inflation. With us now is Dr. Stephen Fuller, an economist at George Mason University, and also with us Susan Stewart, the president of Charter Financial Group. Thanks for being with us. We appreciate it. I guess the first thing is it was a really long weekend for so many people. We saw the huge drop on Friday, only to have some of our fears quelled with a better market yesterday. But is it enough? Has the Fed really done enough to curb some of the fears in this country? What do you think, Stephen?
Well, the Fed's action has certainly been very bold. It isn't only this action yesterday and over the weekend. This has been going on since September. Whether it's enough, we don't know. I think, though, that we've about turned the corner. The banks are in pretty good shape now, the normal commercial banks, and the Wall Street banks seem to be reporting better profits than expected. We had another report this morning. I think we're getting close.
And Goldman Sachs saying that they're doing okay.
I think this is third quarter, though, before we begin to see the economy smooth out. It's the consumers that everybody's looking to now, and whether they're going to start spending again, and they'll get their rent check, or excuse me, their refunds on their income tax.
Which the government wants them to spend?
Well, they will spend. Those are bigger than the checks they'll get in May and June. These, the refunds from their 2007 income tax overpayments, many people overpay, that'll go back into the retail spending. We'll see some increase here, I think, over the summer.
And Susan, you deal with the consumers. That's knocking on your door.
I manage stock and bond portfolios, so I'm hearing from, certainly Monday morning, we had a bunch of phone calls from people concerned, what should they do? And so, my message is simply that it's not time to act after there's been a huge downdraft. The time to get your plan in place is before that happens, right, Steve?
Correct.
So I don't know what people should do to their portfolios today because I don't know what they own. I know what my clients own and I'm comfortable with it, but I think investors should take this opportunity to prepare for the next one.
What do they do with the refund check and the other monies that may come in from the government in the next couple of months? What do you tell your investors?
Well, I mean, as an investor, I'd like them to spend it, wouldn't I? As if you own U.S. stocks, you'd like them to keep spending at Coach and Abercrombie and Blackberries and Apples and all that stuff. I'm seeing people being a little more conservative this year. I think it's a reflection of sort of that perception that there is a downturn. So I don't know. Steve's the economist. Steve, are we thinking they're going to spend their checks?
Well, I think we're hoping they'll spend their checks. They should pay off their debt. This is a good time to reduce debt and maintain some liquidity and just be careful for the next couple of months. But in the Washington area, we're a little less vulnerable than elsewhere in the country, and so I think it's looking better here. And we will see more action in the economy, both retail sales and housing starts. Building permits have increased recently, the last 3 months. So I think the economy, it isn't quite there yet. People are watching, but it's poised to start slowly accelerating as we move into the fall.
How does this trickle down to the homeowner? Because we know they've been strapped.
Well, most homeowners have fixed-rate mortgages. They haven't been impacted other than higher energy costs over the winter. It was a pretty mild winter here, so we lucked out on that. I do think the mortgages that we're worried about, the ones that are going to reset this year and next year, these variable rate mortgages will find a little bit more favorable interest rates, so it may help them just a little bit.
Let's hope.
Don't expect interest rates to drop very much.
All right, that's all the time we have. Thank you so much for joining us, Susan Stewart and Dr. Stephen Fuller. We appreciate your time this morning.
Thank you, Jennifer.